Hello friends, in the series on the income tax cases, today we will discuss a very important case on payment of bonus to the directors. The name of the case is Principal Commissioner of Income Tax versus BMO Advisors Private Limited, and this case has been reported in 451 ITR, page number 389. This is a very recent judgment. In this case, there was discussion on the issue of bonus paid to directors under section 36 subsection 1 clause II. The preamble of section 36 subsection 1 clause II is bonus and commission payment to the employees. In the present assessment year for which this case was related, bonus was paid to the directors of the company. While the assessment proceedings were going on, the learned assessing officer was of the opinion that bonus cannot be paid to the directors of the company and hence it is not allowed to the assessee. The assessee said that this bonus has been paid for the services which has been rendered by the directors of the company to the company, and the same issue has been adjudicated in favor of the assessee in the higher forums for the previous assessment years. But the learned assessing officer was not impressed with the point of the assessee, and he did the addition into the income of the assessee for the amount of the bonus paid to the directors of the company. When this amount was in litigation, the relief was given by the ITAT also, but the department chosen to file the appeal before the High Court, as it usually happens, because they do not file the appeal with the merits. They just file it because it is a ritual. Although there are a lot of guidelines by the CBDT that only the quality orders should be appealed before the higher forums. When the matter came to the Delhi High Court said that bonus paid to the directors of the company has been the issue in the previous years also, and on the same matter the relief has been given to the assessee. The plea of the department that the principle of resjudicata and principle of estoppel does not apply in the income tax proceedings, this point is rightly correct, but there is importance of consistency in the matters of the income tax litigation. When there is no change in the facts and circumstances, the principle of consistency cannot be broken, and if the same issue has been upheld in favor of the assessee, then in the subsequent years the addition cannot be made for the same point. Delhi High Court was very clear that if the issue has been decided in favor of the assessee in the previous years, then the plea of the department that the principle of res judicata and principle of estoppel do not apply to the income tax proceedings was not correct. Delhi High Court quoted a very leading judgment on this point of the Supreme Court. The citation of the case is CIT versus Excel Industries Ltd, 2013, 358 ITR, page number 295. In that case, Supreme Court held that it is not appropriate to allow reconsideration of an issue for a subsequent assessment year if the same fundamental aspect permeates in different assessment years. So from this case, one point is very clear that there is no denial in the Income Tax Act that the bonus cannot be paid to the directors. And if the bonus has been paid to the directors, then it is an allowable expenditure if the other conditions are satisfied. For example, it is wholly and exclusively for the purpose of the business, and it should not be as an appropriation of profit. So in this case, the assessee got the relief on the matter of section 36 subsection 1 clause II, which says about the bonus and commission paid to the employees. And in this case, the bonus paid to the directors was upheld to be a correct deduction in the Income Tax Act. Friends, at the end of this video, once again I am repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus BMO Advisors Private Limited, and this case has been reported in 451 ITR at page number 389. The matter has been decided by Delhi High Court. Thank you, friends.